It is now the time to start Kansai Paint India Strategy Briefing. My name is Matsumoto from the IR and Public Relations Department of Kansai Paint, and I will be serving as the MC. Thank you very much for taking the time out of your busy schedule to attend the Kansai Paint India Strategy Briefing. I would like to introduce the attendees from our company. Takahashi Tomioka, Kansai Paint, Director of the Board, Managing Executive Officer and Chief of Corporate Planning, Finance, HR, and Administration, and Ozawa. And from Kansai Nerolac Paints, Mr. Pravin Prodri, and also Roti Makani, and Hirokazu Koteri, and Amrit Reki. I will briefly explain today's schedule. After this, first of all, Tomioka will say a few words to everyone. After that, Tomioka and Kansai Nerolac Paints will explain the India business strategy. We will then move on to the Q&A session. This is scheduled to end at 5:15 p.m. Japan time. Therefore, for the questions, there is a possibility that questions will be asked from the Indian side, so we kindly ask you to keep your questions to one question at a time. Now, without further ado, Tomioka will deliver his greetings.
Hello, everyone. Last year or beginning of this year, we have presentation in Europe and then Africa. So this is the third time we are providing this strategy meeting. Thank you very much for your participating. And we will do our utmost to provide the best mix of this session. The 11th of April, Nishibashi-san of our company had to step down. I was working in the corporate side, but I have now transferred to the business unit. However, I am the CFO, therefore, I will continue my role engaging in a dialogue with the investors. There is no change in the IR activities going forward. I hope to engage in good communication with you going forward, and the result of the dialogue we have with the investors will be conveyed to the business side in our company. Without further ado, I'd like to go to the presentation. Now, today, we will follow the process of Europe and Africa. We will first of all talk about the value of India for Kansai Paint from my part. Next slide, please. Here, I'm not going to labor this point in detail, but as you know very well, India is the region that we are hoping for most growth in our group. On the part of the group, India will be leveraging three pillars, which are automotive, deco, and industrial. And by so doing, we will aim to reach the number two level in India. Next slide, please. Here, it's India business at a glance. This is something that I've covered many times in the past. Within Kansai Paint, the percentage of India sales is around 1/4 of revenues, as you can see on the left-hand top pie chart. This is a very significant position. And looking at the breakdown of India, as you can see below, auto, industrial, and decorative. These are the three pillars. You can see that more than half is accounted for by decorative. And going forward, we want to grow the industrial, auto as well. So we will have three distinct pillars in the India segment. Right-hand side, you can see that, as you know very well, India has continued significant growth in the past. And on the part of the Kansai Paint group, we are exceeding the growing market. We hope to maintain this momentum going forward. For India overall, India is expected to grow above the global level, and we want to exceed our strength in India as well, as you can see. And number 4, although there are some concerns, the Indian segment has hit bottom in 21, and it has now returned to the growth trajectory under the new management members who will be speaking today. We hope to continue this growing trend going forward. Please go to the next slide. This is the long-term and short-term perspectives that are outlined here. In the long term, we are aiming to become the number 2 group. And 10% growth is what we would like to achieve constantly. EBITDA margin is to drive the level of our group. We want to reach high levels of EBITDA margins in the next 2 to 3 years. In the near term, compared to our expectations, there are some softening in the market, but we are aiming for 9% growth on an annual basis. EBITDA margin, we will aim for 14 to 15% on our road to achieving 18%. Now, the headquarters expectations for the India segment is under Pravin, the new CEO, to be a leader of the Kansai Paints Group and to maintain the number 1 position in the auto business further, and to become number 1 in the industrial coatings. These are the high expectations of the headquarters toward India, and overall establish a unique portfolio business model to be fully leveraged so that the growth and profitability can both be achieved. We want to show that this is possible in the decorative coatings market. The main speaker is my Indian colleagues, so I wanted to make my presentation brief. But moving on to the next page. So here onward, I'm going to pass the baton to the Indian side, and the new management will discuss our plans going forward. So first of all, to Kotara-san, over to you.
Thank you very much, Tomioka-san. My name is Hirokazu Kotera. I have been based in Mumbai for the last 2.5 years and currently acting as the executive director of the company. And again, please allow me to introduce our leadership team here who are participating in today's session. First of all, Pravin Chowdhury, Prashant Pai, Rohit Malkani, Amrit Rekhi, and also we have Mr. Yash Ahuja, who is our CFO in designate here, also attending today. And now it is my great pleasure to introduce Pravin Chowdhury, who is a seasoned leader with over 30 years of the global experiences in the paint and the pigment industry. He will bring, strong track record of driving transformation and sustainable growth. Having worked closely with him, I can say with my confidence that his leadership consistently reflects the values and principles as shown here. So with his integrity, clear vision, and also the deep commitment to people, I do believe that he is exceptionally well suited to lead us forward further. And we are confident that under his guidance, we should be able to reach new heights and create lasting value. So now I will hand it over to Pravin.
Yeah, thank you. Yeah, so as you can see, India long-term growth story continues and it is supported by some of the features which are listed here. I'll touch upon some of them. India offers a rich demographic dividend with median age of 24 years and young and working age population. These are the factors which will support growth in the coming years. Further urbanization and infrastructure push and Make in India, which Government of India announced and going well, is also fueling long-term demand. India's GDP growth remains resilient at 6 to 7%, and it is expected to do so in short term, driven by strong domestic demand. So overall, India remains a strategic coating market for Kansai Group, and it's offering massive potential in construction, industrial for infrastructure, and automotive as a whole. Next, please. So this slide has been presented earlier also in our investor conferences. However, there is one change which you see on the top with a vision now pre-christened for a Kansai Group, which is enriched life with happiness. So you can see that Kansai Group is transforming itself and redefining its positioning as we go forward in this midterm plan. You can see from the picture, Nerolac touches lives in many forms and ways. Aim of Nerolac henceforth is to bring happiness by being solutions company, going beyond just colors and beauty. Expanding portfolio, and this shift will add to diversity and resilience to our portfolio beyond decorative coating. Next. Yeah, this slide actually tells us our segment-wise penetration, and you can see that we are present across all major coating verticals and have a very diversified portfolio, having unhindered access to global resources. You can also see our position. So in two categories, auto and powder, we are number 1, and in deco, general industrial high performance, we are number 3, and only on auto finish, because we entered late, we are number 4, but there also we are catching up fast. Our vision here is not just volume expansion, but it's a strategic market share leadership across all segments. Our emphasis on in-house innovation ensures long-term differentiations and margin protection. The footprint strategy here focuses on targeted presence where there is a higher growth potential in the market. Next, please. As far as our vision is concerned, which I explained earlier, here strategy is not a brand new, but I think we're embarking on a transformation mission. We are activating dual levers of growth, which will consist of market, products, and segments, and enablers, which will be supported by processes, governance, and digitalization. Under growth drivers, we'll be investing in fast-growing segments of industrial coating, and we'll look at expanding our presence in infrastructure pace. One Kansai approach, which is defined by our Kansai headquarters. This approach will ensure cross-functional alignment across the group and portfolio efficiency across various verticals of coating business that we have. We are also leveraging our past acquisitions in India, which especially in the construction chemical area, to aggressively widen our presence in the mason-led and repair category. Under operational improvement, our agile resource allocation and a global purchasing will help strengthen our competitiveness. Improving speed to market through digitalization, digitalizing all sales operations and supply chain will be our focus. And in terms of efficiency, it will be focusing on cash conversion cycle, mainly focusing on the inventory. Next, please. Yeah, so this is the summary slide of our midterm plan, which aims at balancing 3 imperatives of growth, innovation, and stability. Industrial will be our growth segment. Automotive will thrive on our innovative technological advanced solutions and strong customer relationship. In short term, decorative business will focus on strengthening strong geographies, project segment, and premiumizing our overall portfolio mix. Now I hand over to Amrut Rekhi. He'll take you through our industrial and auto strategy slightly in detail.
Thank you. I will be taking you through a perspective of Indian industrial coating business and would be sharing details about our presence and plans for this business line. Kansai Nerolac maintains a strong presence across all segments of industrial coating business in India. In the automotive segment, our company maintains a strong leadership position with significant market share. In powder coating business, our company is the largest player, commanding a high market share. In the other industrial business segments of general industrial, high performance, and auto refinish, we are among the fast-growing players. These segments represent a good opportunity for us to grow further in the future. Next slide, please. Yeah. The automotive business is a core business for us, and let us look at it in some more detail. The auto business has 4 sub-segments: passenger vehicles, two-wheelers, commercial vehicles, and tractors. There has been a steady increase in production across all 4 sub-segments since the recovery from COVID pandemic. Most of the automotive companies are bullish about growth prospects in India and are planning to expand production capacity. This growth trend is supported by favorable macroeconomic activity in India, as well as increasing trend in car exports from India. As a market leader, we are well positioned to capitalize on the growing demand for automotive coatings, driven by increased production and capacity expansion by auto majors. Next slide, please. In the previous slide, we have seen the emerging trends in automotive production. Let us now see the implications of this growth on our revenue and market share. Over the last 5 years, we have been able to leverage our strengths and have doubled our sales across all automotive subsegments. In terms of market share expansion, we have outpaced market growth, achieving a significant increase in market share. Next slide. Yeah. In this slide, we would like to highlight some of the core strengths that we have, which have led us to this leadership position. Some of our strengths are global technology from Kansai, Japan, which enables us to offer high-quality, innovative products tailored to market needs. Strong connect with leading Japanese and Indian OEMs has ensured a steady demand and preferred supplier status. Enhanced R&D capabilities in India allow us to provide customized solutions and faster innovation. And lastly, strategically located multi-location plants enable us to give seamless service, reduce operational risk, and enhance business continuity with our customers. These strengths have helped us to enter new segments and expand our presence in new categories such as electric vehicles. In this slide, we are providing a pictorial representation of our presence across various segments and expansion plans. For the powder business, we have a strong presence in the white good and furniture segments, and our aim is to expand into newer segments such as alloy wheels and rebar. Similarly, in the general industrial and high performance coating business, we are present across many segments and are further enhancing our presence in bridges and coil coatings. Next. This slide outlines our roadmap for expanding our industrial business, particularly powder, GI, general industrial, high performance, and auto refinish. The key strategy levers for expansion are premiumization, network expansion, new technologies, and new approvals. If we look at this segment-wise, our powder business has recorded a growth of 40% over the last 3 years, and we want to keep the same momentum going in the future as well. In the general industrial and high performance coating, we have grown by over 50% in the last 3 years, and we have outpaced market growth. Similarly, in the auto refinish business, we've grown by 70% over the last 3 years, and our intent is to continue to grow better than the market. To summarize, we aim to solidify our position as category leader in industrial coating market. We will be achieving this by strengthening our core auto business and aggressively expanding our other industrial segment with a clear vision to outpace market growth. Thank you, and I now hand over to Rohit for his talk on the deco strategy.
Thank you. I will continue the presentation and cover decorative paints. Our decorative paints business caters to both retail and projects customers, that is both B2C and B2B, across our categories of paint, construction chemicals, and premium wood finishes. Specific to each category, in paint, we have a wide range of products that are used for different stages of the painting process, from undercoats, which are putties and primers, to top coats, which are emulsions and enamels. Apart from this, the range also has products that are both water-based and solvent-based. The range also covers all substrates like masonry surfaces, metal, and wood. In construction chemicals, we are consolidating our range across waterproofing, tiling, and admixtures. In wood finishes, our range includes high-performance protective coatings for wood paneling used largely in homes with wardrobes and kitchens. Both polyurethane and waterborne products are present with clear and pigmented options for customers. Next slide, please. We have been strengthening our business in the faster growing categories of projects, construction chemicals, and premium wood finishes in the last 3 years. In these, there is still greater headroom for growth. In projects, growth is being fueled by the vertical growth of cities, where there is a shift from individual homes to larger format high-rise developments. Also, government boost to infrastructure is having a spillover effect. With newer construction practices and materials, construction chemicals are being added to or replacing cement in building and construction techniques across the country. Premium wood finishes are increasingly replacing mica-based laminates and conventional solvent-based paints in homes, giving both these categories a faster trajectory. We have been successful in growing our business faster than the market in these categories in the last 3 years and are confident we can continue to do so. Next slide, please. Our strategy for growth is built on key actions in each category. In retail, we will continue to strengthen our direct connect with both influencers and consumers through service and increase our direct contact with them as well as influencers. New product launches will continue to focus on functionality as well as differentiation. In projects, we will grow our presence and increase reach in more towns. Apart from this, we will strengthen our internal systems and processes to address this growing segment. Lastly, expanding our range of project-specific products to manage specific customer needs will be critical. In construction chemicals and wood, we will continue to expand our product range and fill in gaps. We will increase our distribution of these products in key markets and continue to improve connect with influencers. Next slide, please. In retail, we will also strengthen the core through initiatives to improve the sale or throughput per store. With increased competition, this is very important at our weighted or large customers. Using painting service, different store models, influencers, new products in different combinations. Basis priority of customer and markets is how we plan to improve our sales here. Apart from this, we will add direct dealers with a focus on quality of dealers, as well as fill white spaces through new distributors in smaller towns and under-penetrated districts. In the current environment, we will focus our consumer marketing efforts to strengthen our brand in key geographies. Next slide, please. The Nerolac brand is strong with consumers and has maintained the second position in terms of top-of-mind awareness, even with competition aggression at unprecedented levels. Our advertisement jingle is very well recognized and is our strongest and most unique brand asset. We will leverage our strengths to our advantage. In order to achieve this, we will invest in building the brand to drive premiumization with a strong focus on our Japanese technology, as well as a diverse portfolio of differentiated products. Next slide, please. The last part in our decorative strategy is on products. New products launched in the last 3 years have approximately 10% salience to the decorative business. And this will continue on the back of a healthy pipeline of concepts as well as new products. This is our Paint Plus range of products. The promise of this range is differentiation, high performance, and quality with a warranty. As part of our Paint Plus strategy, we know that bringing new to market concepts is key and must continue on this track. We can already see good sales of many of these products, for example, our Wow Whites range and others. This will drive a stronger brand imagery for us amongst our dealers and painters. Thank you for your time and kind attention to this presentation. With this, I hand over to our Managing Director, Mr. Chaudhary.
Yeah, so that is what we had to share from our side. Now, open a floor to question and answers. Only one request, since our Q4 result is not yet out, we would like your question restricted to basically strategy part and not about Q4 results related questions. Thank you.
We would now like to proceed to Q&A. Please utilize the raise hand button if you wish to ask a question. Please wait for your name to be called, and when you are called, please unmute and ask your question. This is Tomioka. We have many hands up, so let's work together. Let's have one question each, and if we finish, we can have a second round as well. So please be organized. Citigroup, Nishiyama-san, please go ahead. This is Nishiyama of Citigroup Securities. I have a question regarding page 11. This map is very easy to understand, comparing yourself against a competition. For auto and powder, the number of players are limited. But going forward, D and E could enter into the areas of your strength. Is there such a risk? Berger Paint CEO said that the Asian Paint is taking a share, and he said that there is going to be intensified competition in the new year. So what is your evaluation of the competitive landscape? Please evaluate further. Please elaborate further.
Okay, thank you. Yeah, your question is valid. I mean, there is always a competition which is there and which might come in the future also. But if you look at our strength positions of auto and powder, where we are number one, we are holding this position for more than 3 decades. And similarly, if you look at our other positions also, we are improving from our number 4. We are actually moved up to number 3 now. And with Kansai groups now homogenization, which is happening through one Kansai, I think there is a global access which is available to us compared to, I would say, other group companies in India. And I think that will bring in a lot of premiumization efforts to fruit. Another thing, if you look at Indian infrastructure and industrial space, now as India is maturing and the economy is growing, there's a lot of requirements which are coming, which are in the premium segment. And that is where a lot of approval specifications and global know-how requirement is required, and that Kansai Group has. So I would say from barrier perspective, I think we are well placed. But obviously there will be a competition which might come in, which has come in the past also, and obviously we are ready through our network, supply chain, R&D that we have here, strong R&D and technical service. I think we'll be ready to fight out competition as we go forward.
Thank you very much. But how is that reflected in the midterm plan? On page 23, you have 4 segments in DECO. What is the competitive environment in these 4 areas on page 23? It seems that your market share is about 1-digit level, but what kind of market share do you hope to achieve in 3 years down the road for these segments, for these areas?
Yeah. So as far as decorative is concerned, in short term, yes, definitely there is a intensified competition. But we believe that, in near term, I think this competition intensity will settle, and there'll be a level playing field which will be arrived at, and there'll be redistribution of market share that might happen. Given the legacy of Nerolac paints and the market connect that we have, I'm sure there'll be enough opportunity for us to grow. And to currently in the short term, to tie over this, we are focusing on the project segment, construction chemical and wood finish, where we are actually outpacing the market. And as far as retail is concerned, we have very strong areas in north and east, and where our large share of sale comes from. That is where our focus will be entirely in terms of stabilizing the market and not losing anything further. So I think this is a year where there will be competition which will be aggressive. Our aim is to stabilize and hold on to our market position, and then start investing in the growth through our leverage and through our levers that we have.
Thank you very much. That's all from me. But
Thank you.
Tomioka-san, would you also like to evaluate the situation as well? Yes, I would also like to weigh in. To your first question, I would say that there is possibility that competition will enter the market, but compared to decorative, the business model, there are many common factors. Therefore, the barrier is lower. But for industrial, it is more difficult for competitors to enter. So we have advantage, and therefore we feel that this is solid, not like what we are facing in decorative. In terms of the market, especially for decorative, the competitive environment is similar to Baja. For up until 2025, up until the first half, it's going to be very intensified. There are various measures that will be implemented by the competition. However, I think it is going to run its course at the entry level, and this is likely to happen in 2025. Furthermore, regarding the second point, I would like to mention that in the midterm plan for 18, what we have explained have already been reflected. And in order to achieve the midterm management plan, we are implementing the measures that we have outlined today. Thank you very much.
Next, UBS Securities, Omura-san, please go ahead.
Yeah, right. So as far as for each segment, I would say, this for decorative, in the short term, actually, what we are seeing is actually opposite of what you are sort of expecting. There's a lot of down trading that is happening in the current situation because of pressures in the urban areas, and the rural area historically has been leaning towards economy. So that I believe is a short-term trend. But overall, I think in decorative volume and value should match, I think, going forward. As far as industrial is concerned, yes, definitely there will be premiumization push, and hence our value growth will be higher than the volume growth. That is our expectation. And auto, I believe it will be a steady rate. There will not be much of a change as far as auto is concerned. Yeah.
Even in deco, we are trying to move towards emulsion, more focus on emulsion, which gives us better value realization, and of course, focus on premiumization.
No, not really at this stage. Thank you.
Next, Ikeda-san of Goldman Sachs Securities.
So at this stage, there is no thinking on this. I think we believe decorative has enough potential because our per capita consumption in India is just about 3.5 kg compared to global average of 9. So if India has to become third global economy in years to come, I think this per capita also is likely to grow. And decorative business obviously is likely to grow in that direction. And as earlier mentioned, this competitive intensity, I think, should settle in this year. I think it will run its course. And with that happening, I think our redistributed market share companies will try to grow. Historically, they have been growing at 1.5 times of GDP. I think that growth rate will return, and there will be enough space available for the players. So at this stage, with this thinking in mind, I don't think there's any discussion regarding spinning of decorative, and obviously we'll be continuing to focus on our strong area as far as deco is concerned. Yeah, I think a very good question. As far as industrial and decorative, there are some parts where there is a synergy, especially in the project. And now, in fact, there is a team which is formed in Nerolac, which will be focusing on this project end to end through digitalization. So whenever the project is kicked off, they right from construction chemical till interior exterior painting till floor coating, I think all segments where we are present will be attacked, and I think there'll be complete synergy which will be brought in between these two divisions. Auto is something unique because of different application requirements and out and out B2B requirement. It's a separate channel, a separate team, but industrial and decorative, yes, there is a synergy as far as project segment is concerned. Thank you.
Thank you very much from Mizuho Securities. Yoshida-san, please go ahead. This is Yoshida from Mizuho Securities. Thank you very much for your presentation. Within the India business, I would like to know how you think about the necessity for M&A. Page 13, what is shown right here, especially the growth area, you are showing industrial. It seems that it's going to grow by large. For this part, are you going to actively utilize M&A? Do you have such thoughts? That's my first question. And also, the other areas for auto and deco, are you thinking about conducting an M&A in those areas as well? Thank you. First of all, I would like to answer first and then followed by Kevin. As you have asked, within the industrial, the bolt-on type M&A is what we would like to aim for. And for deco and auto, for us, the priority is low specific numbers are not reflected yet. For us, we're at the stage of finding a good partner. So, Pravin, if you have any additions or corrections, please comment.
Yeah. No, I think Tomika-san mentioned it correctly. We'll definitely be keen on bolt-on M&A. Obviously, we'll keep synergies and gaps in mind, and also valuation. That matters the most because we'll be also looking at profitability and PMI possibilities. So with that in mind, if there are opportunities which will come across, definitely we'll be considering it.
It all depends on if you will have a good deal. But regarding the size of it or the timing of it, are you considering in specific terms? As long as we can find a good partner, we would like to do it within this medium term. But in terms of size, I don't think it exists, and we're not aiming for that. And with the industrial market, many small size competitors are competing with each other. So within that market situation, we would like to thoroughly look for a partner that will fill in our gaps. And we're not going to force ourselves to acquire a company to increase the sales, but rather, if we find a partner that's going to improve or enhance the value of Nerolac, we would like to go into the M&A. We have multiple contacts right now, so we would like to put our efforts so that we will be able to expect good news. But at this point, we don't have any specifics. But the contacts or the size that we have in mind is not going to be that large. It's several 100 million yens is the scale. So Pravin-san, if you can you add?
No, I think you're right. I think that's how our view is also.
Okay, understood. Thank you very much. That's all.
Thank you.
Thank you very much. CLSA, Cho-san, please. This is Cho of CLSA Securities. I have a question regarding page 16 and page 17. First of all, regarding page 16, you said that there is a two-wheel as well as a four-wheel is very high. But in the case of automobile and two-wheelers, can you give me a breakdown of the two? And regarding margins, I am understanding that the margins are higher for automobile, for passenger. Is that the case? Page 17, the share has gone up to 58%, which is very high. For US and China and Europe, you have a very high share. But number one, is there a possibility that the Korean maker share will increase going forward? Is there a possibility that the share could decline going forward? Pravin-san, would you like to answer this question about share?
Yeah. So as far as share is concerned, I think India for last 3-4 decades have been dominated by Japanese manufacturers. And in fact, in between, there was a time when Korean players have actually improved. But now, if you look at recently, actually, it is again Indians who have taken the charge and they are leading the show. So our Indian manufacturers, after Japanese, are the key players now, and they both together hold significant market share as far as two-wheeler and four-wheeler is concerned. And with both, I think Nerolac has extremely strong position. And I think we have been sustaining it and continuously improving our share clearly through our infrastructure, R&D, and technical service that we offer. I think that is what is reflecting here. So Koreans and others, I think, are pretty marginal at this stage. In future, we don't know, we can't predict what will happen. But I think given the situation, I think we are ready to offer solutions. And everyone, I think even Koreans might look for localization tomorrow, and we are always there to offer our solutions to them also. Thank you.
I would also like to weigh in. So the two wheel and three wheels are very significant, but compared to the four wheels, the painted surface is much less. And India has regulation, but the profitability is not inferior compared to automobile. The volume is very significant, but the painted surface area is not large. So compared to the four-wheel, the four-wheel is making significant contribution to revenues. In terms of the auto parts, this is area where we can pursue further. I think there is more opportunity in auto parts as well. EV, new companies will also be promoted. Therefore, there is so much to look forward to for our company in India going forward. Thank you.
Thank you very much. SMBC Nikko Securities, Shintani-san, please go ahead. Shintani from SMBC Nikko Securities. I have a question regarding page 23, where it says project. I want to confirm. So retail and project, the percentage of each one of them. Your project is 10 to 20% within the decorative. So what is the percentage within the market and also in your company? And for decorative, you are expecting a 1.5 times of the GDP, but with project and retail, is there going to be a difference, or the retail and projects competitive environment? Are there any differences? And what are you working on to respond to that situation is what I would like to know. So Praveen-san, can you answer that question, please?
Sure. So as far as project is concerned, typically for industry, it is about 15 to 20%. And Nerolac is also hovering around that percentage as far as project is concerned. Construction chemical is also in that range and growing. Both are growing at a faster pace. And the reason for project growing faster is because of urbanization and high-rise buildings which are coming. I think as a result of which this project segment is getting a good traction. Now, one of the reasons why Nerolac is also able to do well in project is also because of our industrial exposure and our dealing with B2B expertise. I think this whole key account management and the whole approach of managing leads is very, very superlative compared to competition. I think that is one of the reason also why, despite entering late, I think we are trying to catch up and grow faster than the market. I think these are the main things. Retail, I think, will remain as far as individual housing painting is concerned. But as a mix, if you see, I think going forward, retail will reduce, and project channel and the construction chemical as a segment, which got added into decorative, will enhance its presence in the overall mix.
Okay, understood. Thank you. I have a follow-up question. Recently, there is a difference in the demand trend by region. But if we look at the next fiscal year, in the rural areas or in certain regions, the income will increase. But are you expecting differences in performance depending on the region or area?
Yeah. Difficult to predict at this stage. Till December, what we saw is actually urban areas were not doing well, and rural has started picking up. Historically, I think both have been doing well, but because of our rural population and prosperity and government schemes which are supporting, we have seen slightly higher growth in the rural area. And I believe that is the trend which should continue going forward also. Incidentally, that's the area where Nerolac has a very, very strong presence. And I think that should augur well as we go forward.
Pravin-san, can you answer in a more specific way of answering if you answer in like north, south, north, east, west?
Okay, fine. So if you look at our strong areas are north and east, where we are strong, where large share comes, followed by west and south. So these are the two regions, where we are very, very strong. And that's where our hope in terms of, growth will come as we go forward. And as explained, our initiatives are also lined up focusing on these territories.
So north, as far as decorative is concerned, north accounts for 50% of our decorative business, and east followed by east about 30%. So these are the strong markets. So of course, we are relatively weak in south, but we are a lot of initiatives have been taken to shore up our south business as well. So hopefully in the coming years, we'll be doing there well as there also. Obviously, with this, our overall growth will be much better in the coming years.
Thank you very much for a detailed question.
Thank you.
Thank you very much. Next, Nomura Securities. Zaki-san, please. My name is Okazaki of Nomura Securities. Thank you very much for this opportunity today. I have a follow-up confirmation and question regarding confirmation. Regarding page 23 for Deco, the red bar is the revenue of your company. Is that a correct understanding? What is the red bar
Yes.
signifying?
Yes, our sale.
And now for my question. Several times in the past, in the Deco market, you said that up until the first half of 25 is going to be difficult, but from the second half of 2025, there's going to be stability in the market, according to Tomioka-san's remarks. What is the reason why you think that is the case? Are you seeing signs of recovery? Please elaborate further. That's my question. Pravin-san, can you take this question?
Yeah, right. So from 2025 second half, we believe that one is market likely to improve from the current slowdown that we had seen last year and a half. The second was also because of competition which has come in. Obviously, existing players have actually got impacted to the extent of 2 to 3%, and every player in the industry got impacted, and share redistribution has happened. Now, having seen this, we believe that competition will reach and peak out in this year, and that's where we believe that this whole thing will be stabilized in the second half.
So I want to know why you think this is going to stabilize. Are there already signs visible in the market that the market is stabilizing? Can you be more specific?
Yeah. So as far as Q4 is concerned, we have seen, from competition perspective, their overall sale has stabilized and they are not able to increase further. And we believe that numeric distribution, which has happened, I think is almost over now. There's no further dealer expansion that is possible. Now the levers of brand and influencer management will kick in, and which we believe is not so easy to leverage in just year and a half presence in the market. I think that's where we believe there'll be a lot of challenge and some advantage to the existing player through their own network and through their relationship. I think they'll be able to add more value as far as this segment is concerned. Rohit, would you like to add?
I think that is largely it. Also with hopefully positive monsoon will also help the overall demand situation.
Yeah.
Tomioka-san, do you also have additional comments on this? Well, I will discuss this with the members later, but they are saying in Japanese, let me elaborate. There have been lots of new entries, so there have been confusion, but all the strategies have run its course for new entrants. And in terms of overall demand, there has been a slowdown continuing, but this year onward, we are seeing expectations for improvement. The new entrance threat has already finished its first stage, and now there is likely to be more stability in the market. And the weak demand is likely to recover from the second half. That is the gist of the explanation. Thank you.
Abe-san from Macquarie.
Hi, am I audible?
Yeah, you are audible, yes.
Yes. Hi, sir. Sir, traditionally the industrial margin, has been more volatile versus decorative. With our focus being a lot more, and it seems from the presentation, to increase salience of as industrial, should we expect a higher volatility in margin profile? And if not, why?
So I think we have been saying that in case of industrial also, we are moving from low value items to premium products. We have exited most of the non-profit making items as SKUs to our profitable items. So that's the reason we are very confident that going forward, our industrial margins will improve. So from that point of view, even if my industrial sales go down, overall margins will not go down, because we are very confident that industrial margins going forward will do better.
Okay, sir. And so just related to that, your target of reaching 14 to 15% margin over the next 2 to 3 years from current around 13%, is there a path into or a split in terms of, is it largely through gross margin? Is it more? Could you give us some sense on how should we look at this expansion panning out?
So yeah, there are a lot of initiatives already planned. For example, there's a lot of cost optimization we have already started. And also through global sourcing, there's a strong global sourcing. We are getting a lot of benefits on the raw material front, and also on the manufacturing side, a lot of automation and yield improvement projects have taken. And at the same time, we are also on the decorative front. We are trying to premiumize our products, focus on more emulsions, and try to get better margins. Right. Overall, as I also mentioned, industrial, we are virtually weeded out all the low margin items. So all these efforts which we have planned, I think definitely will put us in a better margin portfolio going forward.
Got it, sir. That's all from my side. Thank you.
Next, Nomura Mihail-san, please.
Hi, sir. Good afternoon. I hope I'm audible.
Yeah, Mihail, you are audible.
Thank you for taking my question. So my first question is, firstly, congratulations on a significant performance on improving market share in the industrial and auto side of the business. I think there were a lot of questions historically that, while Kansai is strong there, were you losing market share? But I think with the clarity that you've come out with and the display that you have grown in all the businesses within the auto segment is quite remarkable. So I wanted to check again on the margin profile within the industrial and deco and auto, all the three, because you are now splitting it between 3 versus 2, what we used to historically understand. So if you can, kindly highlight, if the company average is X, what would be the margin for auto and industrial, and with both on gross and EBITDA level? And within those also, I see you're focusing more on projects and construction chemicals and waterproofing within deco, which I again thought probably were margin dilutive than the deco business. So I'm unable to triangulate how are you going to move your margin from 14 to 18%. So maybe some insights on that.
Yeah. So historically, you are aware that at gross margin level, decorative margins were always higher compared to industrial. Okay. And what happened in the early 2-3 years back, because of the high inflation, industrial margins went as low as single digit. But over the last 2 years, we have been able to do a lot of work on industrial margins based on raw material front, as well as various initiatives on manufacturing. We have been able to scale up the industrial margins. So now at EBITDA level, they are more or less on very close to each other, so that there is no major concern as far as we are concerned on the margin front. Right now, having taken all these initiatives, we believe that we should be able to do better going forward, because there are a lot of initiatives in pipeline, which we believe that should augur well for the company.
And Mihir, one more addition to on sales side. If you look at this high performance coating as well as powder, there are many segments in that, and there are segments which Kansai was not present, which are actually premium in nature, and that's where now technology infusion is happening. To support this, Kansai Japan, we also acquired a company in Europe, which is specialized only in railways, specialized in heat resistant coating, non-stick coating. So these were the segments where we were not present at all, neither we had any technology or approvals. They also acquired one powder coating company, which has very good technology bandwidth available, both in premium as well as auto sector. So I think all this technology portfolio which is available to us now, and with this approach of one Kansai, I think this portfolio leverage that I can do, I think will add significant top line as well as bottom line as we move forward.
Understood. So then that's quite helpful and makes a lot of sense. And thank you for that clarification. So my second question is on the growth profile. I mean, we have seen 40, 50, and 70% growth in the industrial and auto part of the business. Can one assume that the low-hanging fruits are now, and maybe growth from here on, probably at the previous slide, I think, this one. Probably, low-hanging fruits are now kind of achieved, and growth from here on, while there is a dotted line which is continuing to go up, but any elaboration on this slide, if you can just talk about, to give us confidence that this will continue to grow in that linear manner?
Yeah, Amrut will answer.
So, Mihir, we were earlier focused on auto, but in the last few years, we have now carved out this non-auto business. Powder, we've always been strong traditionally, but where we are focusing our most is the kind of a new focus on this GI HPC part and also on the ARF part. Now, while we have grown very well, there still is a lot of room to grow for us. So, and also our shares are not that high as they are in powder and auto. So it naturally means our focus and the good momentum in the market means that there's still significant growth possible there. And we build a very good base and structure now, and we need to just leverage that and grow further. So I feel that we are fairly confident that the same trajectory will continue.
Got it. So that gives a lot of confidence. Thank you very much, and wishing the entire new team all the very best.
Thank you, mate.
Thank you very much. I see from ICIC, Aniruddha, please go ahead.
Aniruddha, yeah.
You're not audible.
Slightly louder. Yeah.
Better, yeah. Yeah. So on your first question, Anirudh, see, we look at the powder, ARF, GIHPC auto as a segment. Likewise, Deco is a segment. So we are not getting into product mix of each segment, as you would have noticed. So at this stage, I think we'll restrict to this, and yeah, I mean that's the approach we would like to take as far as segment play is concerned. And as far as the second question on softening of crude is concerned, I think, yeah, overall raw material situation indeed is benign, but if you look at against crude, I think our dollar is pretty volatile. That being one. Second thing is also, if you look at our global geopolitical situation, especially with tariffs and supply chain slight issue which is hanging around, I think those uncertainties are still there. So we believe whatever softness that comes in and delivered to us through RM situation, I'm sure we'll be able to improve our profitability. That is our major focus as of now. Decorative, as stated earlier, I think will be clearly focused on a strong market on North and East, and it will not be all India play and trying to protect the situation everywhere. So wherever we are strong, definitely there'll be investment, and we'll definitely would like to grow as far as those strong markets are concerned. Thank you, Anirudh.
Thank you. Citizen, please.
Yeah, hi, Praveen and team. Thanks for the opportunity. It is really insightful. Two questions. If I believe industrial is a very good, strong wicket for us, and we have been leaders in auto segments, can you share how the share of top three players in the particularly auto segment has moved over last 3 years? I mean, business contribution. And my second question is that if you have any roadmap in the industrial, if it is going to be stronger, how you look at the new customer acquisition has changed over last 2-3 years, and is there any meaningful new customer acquisition has happened over last 15 odd months, or is there something which is pipeline which will drive this business?
Yeah,
that's it.
So, industrial has always been our strength, and in automotive, though we have a very strong market share for the last few years, we have post-COVID acquired a significant market share. Means we've increased our share where we were present. So that is what has led us to this improved trajectory and market share that you're saying. We believe we will continue to, in the next 2 years, continue to increase our share because we have a very focused plan of acquiring, higher share, and we are bringing in new technology and products so that we are always ahead of the curve. So auto is something which is a core to our business, as I mentioned. In powder coating, which is the second biggest business we have a clear plan of premiumization there. And, we are entering into newer segments such as alloy wheels, which is, on the premium side of the business. And, other functional coatings like, rebar and pipe we are getting into. So that is the second part. The third part, the high performance coating, which is a very fast growing segment, as I mentioned, we are doing very well and we have a lot of way to go. There we have got a very focused plan of network expansion and getting new approvals. And accordingly, we have, aligned our teams also in such a way that we are able to take advantage of the, spend that is happening by the government in infrastructure. And we've got a very nice pipeline of projects that are there with us currently. And we see that that will be our route forward by approvals, by new technologies to acquire new customers and grow.
Okay, that's helpful. Just one follow-up. In the powder coating business, what kind of spreads in terms of geographies you would have? And maybe if you can give a little more color, how much is between that powder coating in terms of various segments, where you are stronger and which are the growth parameters which are you applying based on the technology and going forward the customer acquisition?
Yeah, so powder coating is, gaining prominence because it is a very eco-friendly coating. it doesn't have solvents, that is why it is being preferred by more and more customers, and a lot of people are migrating also from liquid to powder, particularly on the automotive side. While we are so we being leaders, we are double the size of our nearest competitor, and across white goods, furniture, ACs, and electricals, we have a very, very good presence. This is across segments and also across geographies. So the big markets for powder coating are basically north and west, and in both the places we are very strong. We also have a unique advantage of being the only company with several plants to cater to demand, and that gives us a very unique position to be close to the customers and as well as service the customer requirement fast. So, this has been a traditional strength area for us, and we want to continue to expand in powder coating in the days to come.
That's really helpful. Thank you, Praveen, and all the best.
Thank you, Shirish. Thank you. Roshan?
Hello, am I audible?
Yes.
Yeah. Thank you. Thanks a lot for the opportunity, and congratulations to the new team. My question is regarding the decorative business. So, given that the increasing competitive intensity, so what differently Kansai is now planning to do, or what would be the strategy here to protect the market share, or to focus, go aggressively in gaining the market share? How would the plan pan out going forward?
Yeah, Rohit.
Yeah. Roshan, like we had mentioned in our presentation, right? Where there is headroom for us to do much better, those segments we will be driving more aggressively. That is, in the project segment, in construction chemicals and wood finishes. In retail, we will be following up more of a protect and a more stable approach. And like we have said, we will focus on select geographies to ensure that we are able to to take care of any any aggression that competition comes up with in these areas.
Yeah.
Right, understood. That's helpful. And the next question is, given that the crude oil prices are softening, which will potentially lead to expansion in gross margins going forward. How do you see that? I mean, in the near term, maybe can we see increase in the advertising spends going up? Maybe utilizing those benefits to increase the advertising spends. How do you look at it?
So, see, advertising spends, we will continue in line with whatever we have been managing so far. Like we have said that our top of mind awareness is number 2. So we will not be going extremely aggressive on that front. But we are very cognizant of the fact that we have to maintain that number 2 position, and strengthen what Nerolac has always stood for, right? So, like we have said that Japanese technology and high quality products is what we will continue to build through what we do in this area.
Correct. And additionally, Roshan, whatever Rohit has mentioned, the mix of this advertising itself is undergoing change, and we are also going to change from media to digital to influencer management. So I think that mix, will be fine-tuned to our strength markets. Yeah. But as far as overall spend is concerned, yes, as Rohit mentioned, we'll be maintaining our TOMA to support that TOMA level. Definitely spend will be in line with that.
Understood. That's helpful. Thanks a lot, and wish you all the best.
Thank you, Roshan.
Thank you.
Thank you very much. Aditya-san, you're the last person to ask a question. Please go ahead.
Thanks for this informative presentation, sir. So in the challenges you have highlighted that margin pressure is inevitable. A decline in profit margins is inevitable, as we can see on this particular screen itself. But when we look at the KPIs, the financial KPIs that you have set for 3 years as well as for FY13, there's hardly any margin pressure that we are kind of building in. So if you could just firstly tell us, why do you feel that margins from here could come under pressure? And secondly, how should we reconcile this concern with the KPIs that you're having?
Yeah.
Thank you, sir.
So, yeah, thank you, Aditya. So this particular thing is mentioned as far as Deco is concerned, and these challenges are right now what is persisting in the industry. You would have seen whole industry is re-rated and their margins have come down. Those are playing in the decorative. So these are, I would say, short-term challenge. But the levers that you just told you about industrial and whole premiumization story is one that will support overall company margins. Second thing is our operational efficiency program, which already is underway right now. That also should help us building and improving our efficiency and hence some margins. And specifically for decorative, if you look at, our focus will not be pan-India, it will be very targeted focused and hence will maximize our input-output ratio. And we believe through that, over midterm trajectory of next three years, I think we should be reaching our profit margin that we have already stated.
Sure, sir. And just one clarification, these profit margins that you have stated, EBITDA margins that you compute, those include other income as well?
No.
These are purely operating EBITDA margins.
Operating, EBITDA, yeah.
Perfect. That's helpful, sir. Thank you so much.
Thank you.
Thank you very much. With this, we would like to conclude the India strategy briefing for Kansai Nerolac Paints. Please respond to the survey. And if there are any questions, you can also write in your question in the survey. Thank you very much once again for your participation today.